Here we have the current stock market analysis for GameStop Corporation, stock ticker GME. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts in the comment section below so that other traders will be able to find this information more easily on the platform. So here we're going to be looking at the 1 hour time frame. Each candle on this price chart represents a 1 hour trading period. And as we can see here, the stock itself is continuing to trade under pressure with share prices coming right back into these lows below $20 per share. So in this video, we will be looking at some very specific price zones so that we can identify some key support and resistance levels and hopefully identify profitable trading strategies for this stock going forward. So near term, what we can see here is that the share price low currently comes in at 19.43 per share. So we did see a bit of a modest move lower here, a slight reduction in the overall support zone that we have been watching for this stock. So this does put us right within we're right within very close proximity to those $19.31 lows that would have been posted during the September 11 trading session. So as we can see, this is starting to become a very important level of support. But if we break through here, the downside momentum could begin to accelerate because there really isn't much that's holding up share prices at the moment. As we can see here, possibly the main factor to watch can be found in this 20-hour exponential moving average. As we can see, this yellow line here is declining, and share prices have run into this level on a very consistent basis, only to find resistance zones here. Each instance that we've seen share prices move into this technical signal, we have seen a reduction in share price valuations, and this does suggest that this could continue to work as a primary limiter for share price movement to the top side going forward. If we were to see a break above here, that would be a very encouraging signal because it would then suggest that something in this paradigm is shifted. There's some aspect of this chart behavior, market behavior, that has started to now reverse itself. But as long as this continues, we can't expect the 20-hour exponential moving average to be a major influencing factor for the overall trend direction for GME. So pulling out to the longer term time frames, one of the things that would concern me if I were currently long this stock would be the fact that the indicator reading on the 4 hour price chart is not currently trading in oversold territory. As we can see here, the share price action trading even at these lows of $19.43 has not been enough to send the relative strength index below the 30 level, which would be considered to be an oversold condition. So what this means here is that currently we are seeing an indicator reading that's right around 35.5. And what this does tell us is that the share price itself really shouldn't have much difficulty moving back below those prior lows at 1931 without becoming oversold in the process. So that is a major issue here that I do think that people will need to remain cognizant of. In addition to that, we can look at the broader trend momentum readings here, and we can see, some slightly positive signals that are starting to develop. But as we can see here, the longer term trend momentum trajectory here is still focused in the downward direction. We do have some modestly higher lows that are posting in the relative strength index on the 4 hour time frame. As we can see here, there is an upward slope here, but it's a bit difficult to see because it's not a very strong upward slope. And then we can also start to see that type of trend momentum break somewhat soon if share prices did actually move into oversold territory. We would have to actually see where share prices are heading at that moment because this is a dynamic indicator. It constantly changes. So, we would have to see where share prices are trading as the relative strength index does start to move into oversold territory. But ideally, what you would want to see, the ideal scenario would be seen if share prices were becoming oversold, just as the stock price was hitting that $19.31 level. But as things currently stand here, we're trading right at 1951, and the relative strength index reading is currently holding at 35.7. So that means that the reading has quite a distance here before we start to become oversold. And this suggests that the share price itself really shouldn't have much difficulty moving back below that prior low. So if that is the case, we do have to start then looking back toward this This would be the August 5th price low that came in at $18.73. At that point, that really is one of the last lines in the sand. There really aren't many barriers here to the downside that are protecting bullish positions at the moment. I mean, one area that I would point to comes in at this 1873 level. You also have some support right around 1970. We would have to pull back on the price chart here in order to see that, but it becomes difficult to do that once you're looking at these longer term timeframes. This would really be the support zone that was generated back here. I wouldn't have much faith in this price zone myself, given that this is what occurred after that major price spike, and share prices were becoming incredibly volatile. We did see share prices bounce again after hitting that 1770 area, but this was all of that short squeeze type of activity that was occurring. Roaring Kitty was getting back into the market at that point, and I really don't see that type of event allowing share prices to make those types of bounces again in the future. I mean, I just don't see any reason to believe that share prices are going to have a hard time finding support right around 1950, but then somehow magically finding a tremendous amount of support at 1770. So, to the downside, what I would really be focusing on if I was long on this stock would be these lines in the sand that are lower currently. So one would be 1873, the next one would be 1770, and then from there, if we did see a breach below there, in my view, I think what you're really looking at from that point would be a retest of that $10 level. It's obviously a very important psychological zone, but there would be a lot of negative momentum that would have to be generated for the stock, during that price move lower. I mean, just imagine a share price loss from, roughly 17 to $18 all the way down to $10. I mean, that would be a huge amount of share price decline in percentage terms. And I do think that a lot of people would be starting to get very nervous at that point. So, these are some factors that need to be watched here. Overall, I would still need to see a break above this $21 level in order to start to believe that share prices can start to gain some momentum to the top side. But things are really looking very heavy here below this $20 handle. And there really doesn't seem to be much reason to believe that a bounce for this stock is likely to be imminent. So here's the current stock market update for GameStop Corporation, stock ticker GME. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.